Hello, speaking Forex. This is Gregory here. It's currently close to 8 p.m. Pacific Standard Time, June 10th, 2012, and this is my Forex trade setup for June 11th. So currently on my screen, I have a chart of the Euro USD here. If you guys have been following our analysis for the past month or so, you know that we've been extremely bearish. Everything has planned out exactly as anticipated. So currently we have an interesting situation here. So what this situation I call the gap filling strategy. I'll talk about that more in the course. This is a highly probable trade setup. So let's get into the analysis here. So now I have a hour chart here that actually allows us to look at this more in detail. But before I go to that, let me go back to the daily. All right, so if I zoom out a little bit here, as you can see that this previous support area, remember I was talking about this area around 2620, 2625 a few weeks back, and I was saying how significant it was. And when we approached it, remember it bounced exactly to the tip, to the upside. So eventually we were able to break through, and we retested it perfectly, and we rejected it, and we kept coming down. And once again, I think on Thursday we retested that area once again, and we respected it and came back down. So now when we had to close on Friday and we gapped up higher, first of all, when you have a gap over the weekend, a gap filling strategy in its own is very profitable. But when you start to add these other areas, when these areas start to converge around the same price level, logic tells us that this area is going to hold a lot better than what you may originally anticipate. So I always talk about convergence and confluence, and this is one of those situations. So on an hour chart here, so as you can see, we gapped up higher. We're currently in the Asian session, so we're in market accumulation. Market accumulation is basically a channel. This is where the big money, like the banks and the huge, I guess, market makers, they're able to play the bottom and the top of the channels in order to accumulate positions for themselves because of the lack of liquidity in the Asian session. And then in the London session, they if they haven't gotten enough of positions, they may swing it away that's against conventional wisdom in order to create liquidity for themselves. Now, typically, I'm looking to sell short around this area, especially on a gap. But the reason why I'm not doing it just yet is because I don't want to be caught in a position to where the big money is going to force me to basically fold my hand. And so basically I'm in a situation where I am forced to actually play this a different way. So my particular approach right now is I'm bearish at this particular point because of go back to the daily, the confluence of the support and the gap. So right now I'm looking to go down, but before I do that, I want to make sure that I'm not caught in any compromising situation. So basically, like, they're known to actually put you in a situation to where you actually have to hold on to a tough trade because of you didn't enter the market at the right position or at the right time. So you have to be very careful of that. Now, currently, I expect this day to be a trading day. If you don't know the difference between a trading day and a trending day, we talk about that more in course, and I talk about how to identify that. So this day is going to be a trading day. So since I anticipated trading day, I'm anticipating what I do is I normally sell resistance areas and I buy support areas. So what resistance areas can I sell? Well, of course, on the daily I can sell around the top of this channel, but I want to be safer because if I sell at the top of this channel, there's a support area, and right now there's really not much area for profit. So this area has so much traffic that I tend to stay away from these areas. I want to trade more in space. See right here between these particular levels, there's more space involved here. So these are the areas that I tend to exploit because they're much simpler to trade, and is not really highly manipulatable. So right now we're in a situation to where we can actually take advantage of the space here, but we can't do that until price gets there. Now, so on a trading day, I expect the market to bounce at certain areas the way it's supposed to. So if the market breaks this support area at 2620, and if it breaks through, I expect a bounce at 2600. Now, why do I expect a bounce there? Well, because first of all, it is an even number, and also it is a M4 number, so we do have a confluence area. So it's going to have a temporary bounce. Now, if the market bounces at 2600, then you can actually expect it to go to 2620 because it's only 20 pips, and so that's a pretty realistic assumption that we can actually take there. So now, if the market comes to 2600, we can sell at the resistance of 2620, place our stop around the high of here, or even at the high of this particular I guess, what is that, the R2 level, and maybe go a little bit higher, maybe around the 2650 area because of the half number, and add some confluence there. We can actually ride this all the way down to 2550. So the reason why I'm targeting 2550, first of all, it is a half number, so that is the immediate thing that I look for. The average daily range from the top of the gap, the average daily range is 115 pips for the euro over the past month and a half. So 120 pips is just outside of that, so that's perfectly fine. It doesn't have to be perfect. Just use it as a measuring stick. So currently we have that in our favor. So, and we also, if you notice the head and shoulders pattern here, it's not textbook, but it's still obvious that the support area is very significant. So we have three areas of confluence here that I think that should line up in our favor and allow us to fill this gap with extreme confidence if everything plays out to our favor. So let's recapitulate everything that I discussed thus far. So on the daily, we do have we are approaching a previous support area that has been confirmed. Okay, so also we have this resistance area with these two bars here. I'm looking to go short, but before I go that, I'm looking for the 2620 to give in. I'm looking for a retest of that area before I go short. And this is a highly probable trade, but it has to manifest according to my analysis. Otherwise, I would not take the trade. There's no use to forcing trades. There's so many trading opportunities throughout the week, so we want to make sure everything's clear, clean, and concise. So once the market breaks this area, tested 2600, I'm looking to sell at 2620 because this is a trading day, so I expect the market to trend in a pretty predictable fashion. If I sell at 2620, I'm targeting 2550, and that is a 70 pip profit area, 70 pip profit potential, and I'm going to risk about 30 to 35 pips in the process, so that's a 2-to-1 reward to risk scenario, so you don't have to be right 33% of the time and break even. And as an added bonus, if everything plans out to the way I anticipate, around the close of London and during the US session, if everything lines up accordingly, I'll be looking for a buying opportunity somewhere around here, depending on how the day develops and depending on what I see. Then I'll be looking to buy this back up to actually add on additional profits. So 70 on the way down, and maybe 50 or 60 on the way up. I think you should be able to squeeze out over 100 pips over the course of the day. So definitely take a look out for that. This is the first part of the video. What I do is I make the second part if everything I guess lines up according to what we anticipate. And if it doesn't line up to what we anticipate, we don't make the trade. We don't force anything, but we have to anticipate and figure out exactly how we're going to trade accordingly. So before I sign out, I want to talk about the gold trade that we did last week. If you guys were able to follow along, you know that we were bearish at this point. This is a daily chart, by the way, and we actually targeted this area for profit. As you can see, the market surpassed that with ease, and I think it even came down as far as let's see here, we sold around this area, so it came down 700 pips. I mean, that's insane. I wasn't actually able to capture the whole move. I only caught half of it because I was asleep. Unfortunately, we have to sleep, and that's one of the hardest things about trading the currency markets, because it is 24 hours. But you have to make sacrifices, and and this is one of them. So, but making money while you sleep is one of the best things about this market. You really can't complain about that. So if you go down to the hour chart, and definitely take a look at the video, because I go into more analysis on how to actually approach that particular trade. But we sold somewhere around here. I said to place your stop above here. As you can see, it was probably 1 pip above there. So I'm pretty sure that if you were able to place a stop around here, you were not taken out. And if you were, you have a shady broker, and you should look into that. But if you were stopped out, yeah, shoot me an email. We can talk about how to avoid stuff like that, but you shouldn't have been stopped out. And we were able to ride this all the way down. And as you can see, if you were trailing your stops, you probably caught the whole move. But yeah, I could not, because I was sleeping, and I enjoyed it, frankly. So I guess it was worth an additional 200 or 300 pips. So currently, yeah, that was the state of the gold trade. It's a very, very easy trade setup. We talked about that on Thursday, so definitely take a look at that, and you can see exactly what we did to anticipate that, and basically everything just lined up exactly the way we anticipated. So currently it's a little bit after 8 p.m. guys. So thanks for tuning in, and I'll post part 2 of the Euro trade if everything manifests according to our analysis. So thanks guys for tuning in, and until next time, green trades.